Vincenzo's Go Crypto Investing, and the Fed did do their meeting, and what the Fed said they were going to do and what the market had priced in as far as the stock market and things like that over the last 30 or 45 days. They did raise the benchmark overnight Fed rate by a quarter basis point, which is putrid at best. And it appears to be what I think is signaling an end, or as they paused a month ago, or the last meeting, I think they're about done with this phony, felonious, false fight against inflation that they say, because they're not fighting inflation, they can't beat inflation, and they can't monetative tighten while they're bailing out banks and other things like that and still printing and buying bonds, T-bills, and the rest of the thing. Bell notification, comment down below, like the channel, and most importantly, subscribe to help us push us through the YouTube algorithm and to get more and more people to get educated and information that they need to make their most knowledgeable and insightful decisions when it comes to the most important things in their life, that is their financials and their investments and their overall asset acquisition. And that's what we're here for. Non-biased, non-paid, calls out all the charlatans, fleece heisters, and shysters, as well as the criminal gangsters like this man Jerome Powell, the Federal Reserve, and the United States government and world central banking systems, is that they've been lying to you the whole time, just as they were lying to you when COVID started and they said that it was transitory inflation. Remember that? And then after that showed to be felonious, they said it was sticky inflation. Then they said it was localized and isolated, and they just kept on and on with the lies over the last 2 years. And then about 6 months ago, they started saying uh, they were going to continue to fight the inflation that we know they're not fighting, because a quarter basis point or over the course of the rate hikes, about a 5.5 to 6.5% increase in interest rates is not fighting the inflation that they have. And the talk, they're all bite and no bite, all bark and no bite. And I believe the inflation is going to start accelerating as they start now full on in the next maybe 6 to 12 months, start to ease again, and they start to loosen the fiscal spigots. And they're caught between a rock, a hard place, and a volcano, because if they go up, the market's going down. If they go sideways, the market implodes. And they, in my own personal belief, and I'm not a financial advisor, I believe they would rather prevent a depression, a Great Depression, and they would rather have an inflationary period indefinitely than go through a 1930s type depression, a 1970s type stagflation. They don't want any of that. It's easier for them to push the blame somewhere else, like it's a greedy businessman or corporations or all this other nonsense, and take the blame from themselves and place it somewhere else if they inflate, because assets can go up, houses, stocks. But when you have an inflationary depression, the valuable assets that you want to go up, say homes, stocks, and all that kind of stuff, goes down. But consumer goods and the things we need to live, oil, energy, gas, etc., housing, food, that continues to accelerate and go to the upside in inflation when assets and stocks deflate. And that's the worst of both worlds. That's why in the 1970s, when it happened for the first time, they had to come up with a new word for it, and they called it stagflation, and they tried wage and price controls. And I still believe eventually, somewhere along the line, wage and price controls probably will happen again. And it's going to be for the worse, because price controls never work. All it does is lead to long lines for anything like bread, water, food, gas. It creates shortages, and it creates long lines if you're lucky enough to get a one loaf of bread or a half a gallon of gas, etc., etc. But the transcript of the Federal Reserve today, July the 26th, 2023, Chair Powell remains squarely focused on dual mandate of maximum employment and stable prices for the American people, which obviously we know there are no stable prices. If they're up 3% year over year, 8% year over year, or vice versa, that is not stable. Stable is a pretty even flat line across the board with little peaks and valleys, not like what we've had going on all the time with the clown show. It's the circus, and they're in town. Understand the hardships that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. And use your thinking caps, use your brain. If you have 2% inflation and that's the goal, In 10 years, that's 20% inflation. In 20 years, that's 40% inflation. In 50 years, that is 100% inflation. Okay? That's a horrible policy to have. You want to have zero inflation, or in a Goldilocks world, you want to have negative inflation to where the dollar or the currency that you use has more purchasing power versus you make more money in your hand, but that more money buys less goods than smaller amounts of money if you have deflation, right? So that's something that the average American and the average person does not understand around the world, is if you make 50 grand a year with a 1.2% negative inflation rate, you have a lot of purchasing power and you can buy more goods and services, versus if you double your income and make 100 grand a year versus 50, but the inflation rate is 10 or 12% a year, you have a less purchasing power than if you just had a deflation with the $50,000 salary. You could buy more goods and services on 50 grand than the 100 grand. But the average person doesn't understand that around the world, and the government plays on the ignorance of its constituents, right? And that's why we're here to educate and inform you. Without price stability, the economy doesn't work for anyone in particular. Without price stability, we will not achieve a sustainable period of strong labor market continues that benefit all. Since early last year, the FOMC has significantly tightened the stance on monetary policy. Today took another step. Policy increased interest rates 0.25% or a quarter basis point. We are continuing to reduce our security holdings at a brisk pace. I believe that is false and a manipulation of data and words. We have covered a lot of ground, and the full effect of tightening have yet to be felt. So he's saying that they're going to tighten even farther. Looking ahead, we will continue to take data-dependent approach in determining the extent of additional policy firming that may be appropriate. Recent indicators suggest that the economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier this year, because the average American doesn't have any money. Although activity in the housing sector, and they already maxed out their credit, as we have the highest credit debt, I believe, in the country's history, it remains well below a level a year ago, largely reflecting higher mortgage rates and higher interest rates and slower output. Growth also appears to be weighing on this, right? Blah, blah, blah. Inflation remains well above our long-term goal of 2% over 12 months, ending at 3.8%. For the PCI prices, PCE prices 3.8%, excluding food and energy, because that would probably be double that. That's why they exclude the two things you need every day to live, food and energy. Core PCE rose 4.6% in June. The 12-month change in the Consumer Price Index, or CPI, in at 3.0%, and the core CPI at 4.8%. Inflation has moderated somewhat. Nevertheless, this is above the inflation of 2% that they target. At today's meeting, committee raised the target range of the federal funds rate by a quarter basis point, bringing the target to 5.25 to 5.5. We also continue the process of significantly reducing our securities and bonds and shit like that, right? So that's very important to understand that. But what's also very important to understand on exactly what just took place today is, again, like what I've been telling you, if we're at the 4-hour time frame where we had that big volume spike the day the court case broke, now the volume in XLM in this case has declined drastically, and it all came in a brief span, which allowed the price to skyrocket. Now look today, since that great pump, the volume was depressing, getting closer and closer to the last 12-month mean of the volume, which has been very, very low. And in the history of the coin, the volume is still very, very low. We had one 45-minute or an hour time frame where the volume spiked, and it all came in at once, whereas if that was spread out all day, it wouldn't have had that big of an impact on the price. But they were all buy volume, and as the buy volume came in one small time frame in here, right, the price had a big pump. It went up about, 15% from trough to peak today. And I did trade that a little bit on Robinhood and made 8.5%. And then I sold when it got up into here. But it did spike from peak to trough 15.74%. It did 90% of that move in about an hour time frame right there when that volume came in. But the critical thing I always talk about is, and even in the shorter time frame, the 3 minute, the volume has went way back down, turned into sell volume, and it has come crashing down back even below what the volume was before the pump. And just like I've been saying, if we go into the 6 month time frame, you can see the volume is very, very low. See that in the most recent candle in the 6 month time frame. It's been steadily crashing ever since the 2021 peak. If we even go into the 3 month time frame, you can see that it's very, very low, and it is even below what the volume used to be back here before, after the first hype cycle, before the COVID hype cycle, right? And then if we go into the monthly time frame, you can see what we're talking about. It is still very, very low, although the last 2 months, the volume has slowly started to tick up, but it's coming up near the mean at the end of July, and that could act as resistance. But you can still see the overall mean, and that line right there cutting through the candlesticks is trending down, and it's still much below what the volume was way back in the heyday of the peak. What you really need to see is this volume in the monthly, the weekly, really start to accelerate to the upside. Not that high, but you need to see the mean of the volume start to trade back up. And that would tell you that you have something much, much bigger besides these intermediary pumps that come. If you could get the volume to start trending up. And then if you go into the 4 hour time frame, you can see that right there. You had that one little pump in the 4 hour time frame that is coming to an end in an hour and a half. And my prediction would be you're going to see a steep decline, sort of like you had here, where you have one candlestick and then bam, the volume shoots back down, right? And that's what initiated this last little correction to the downside. So now it's not necessarily how much volume went in over a 30-minute or a 4 hour time frame. It's how the volume has been progressing over a running mean of the weekly, the monthly, the 3 monthly, or the 6 monthly, or the yearly volume to see the trend. And in this case, nothing that just happened in that most recent pump changed anything in the structure of the market. It was just a brief volume spike where everybody heard the Fed's news and everybody said, you know what, I'm going to buy right now. They all bought and the price pumped a little bit. But now what we have to do is face reality, and what might actually be happening here is we had our initial sell-off and it got down to what I added a line here, and this line was essentially going from back here. We need to get into the hour now, the hour time frame. We added a line, and it's right up here. What I think may be happening in XLM, get back out of there, is you could be having a left shoulder, a head. This could be the right shoulder developing, and then you have a slanted neckline, and that might be a head and shoulders topping reversal pattern that this is starting to draw out. And the targeted move would be from, in this case, the head would be higher than here besides that one wick, right? And it can happen like that. And it's horizontal, and you would go to the neckline, and then you would bring that to the point of a breakout, and you could be having a head and shoulders topping reversal pattern, right? And if that did happen, that would drive the price back down to 10.6 cents. Am I calling and saying that has to happen? No. I'm just saying that this is something that I'm watching. Also, we have an up and sideways consolidation after you had a pumping price with a regional pumping volume over that 4 hour candlestick. See it back there? Ever since then, you've had a up and sideways consolidation with crashing volume. As we used to tell you, that is an old trading rule that the buyers are starting to leave the market. The bears are starting to take over the market, and the price is going to come down, right? And that's something we're watching very critically, as that may be happening, and you're going to have your first big test coming up right now, your first two big tests now that you see what I'm drawing out for you and laying out for you there in the XLM price, is you coming up to this 15 cents. If you can't hold this 15 cents that you're on now, with the volume gone now, and it was just a brief short time frame pump, you might be coming all the way back down and giving up that 10%, 12% gain that you just had. You might give it up in the matter of a few hours, and that would be a critical thing because you would break a support level, and if you can't hold that, you're going to drop probably now straight back down if you don't get some buyers to come back in, and this would be a classic hook nose Jew bearish reversal, and you might be getting driven all the way down to that 13 cents. That's just something what I'm paying attention for, trying to give you an honest opinion of what I'm seeing today after the Fed talked and what's been going on ever since the federal judge spoke and we had that big volume spike. I've been trying to give you the truth and what's going on. If you want to continue the bullishness, you got to try to somehow stay above this 15 cents that you're on in blue, get back up on top of the 16.8 cents like we were talking about yesterday, and then continue upwards and breach this old wick. But you got to have the volume come back in because that means the money's flowing back in. All right, so that's what we're looking at in the XLM price. The algo price, as you do know, I bought about 3,000 of these coins to collect yesterday, and we're going to buy $50 worth every week, somewhere through the week of a Sunday to Saturday, to collect $50 worth of more coins and maybe try to get up to a 10,000 maybe try to get up to a 10,000 coin collection of algo as long as the price is below about 20 cents to 15 cents. And right now you can see nothing changed the structure of this market either today. It didn't have a big volume spike in a short time frame, and the price is still trading sideways and down. And what we need to see to get some bullishness back in here, maybe to retest at some point the 23-cent level, is to get the buyers to come in and sort of start to break an old low and create a new local high by like breaking something like that. But you first have to start by breaking here, fight into these moving averages, hold in between the moving averages of the red is the 50 and the green is the 100, and then continue to try to work your way up. Or in the shorter time frame, in the next couple of weeks to months, you might even come down and trickle below 10 cents, 9 cents, 8 cents. Who knows how low it could go until the overall market starts to change. And that is the same thing with the XRP price. The XRP price didn't have as big of a volume spike in the shorter time frame, and you can still see in the daily XRP, you had the big volume spike, volume came down. Now the sellers have started to take over the market, as you can see right here, and we had that up, the same as XLM. And I used to preach this a lot when all the coins were topping out in the top of that bull market. You had a pumping price, pumping volume, bullish. Then you had crashing volume and an up and sideways consolidation, very bearish, often of a sign that the bears or the sellers are taking over the market and the bulls are getting bullied out of the market and the price is going to come down. And the first initial test here is at 70 cents that we tried to rehold. And if we look up in here at the 3-minute time frame, you can see we got on top, and this was what happened right here since the Fed talked. We're getting on top now of that 70 cents, and your first real area is to try to hold the 70 cents and the 200-day moving average. If you don't hold that, we all know that you're coming back down to the 67 cents, which is an old double bottom from about 48 hours ago, and that it's about the mid part nearly of the blue trading zone. And we zoom out to the 4-hour time frame, you would have to hold that, or it brings into this caveat where you have very little volume right there, and if you break that area right there, which just happens to be the blue line, you have no real buyers again until some support at about the 58 cents. That's what I'm looking at. That's what I'm watching out for. Comment down below. Peace and love to my beautiful, glowing, gorgeous, beautiful audience.